Well, hot dang, happy Wednesday, everybody. Hope you're doing well. We're going to have a really productive stream in light of large news announcements for the day. There are some pretty good templates building, but I don't trade FOMC, so we're going to use this time and be productive and talk about some trading process. Identifying templates, keeping things simple. Do not overcomplicate. We're going to put it in 3 steps or less. Probably not less. Maybe even 4 steps. Good morning, everybody. Polly, good morning, Kyle. 4K. Lou, Lori. Morning to you all. Hot dogs early this morning. Yeah. Good morning. All right, good morning, good afternoon, good evening, ladies and gentlemen, wherever you are in the world. I hope you're doing well. Let's get into the stream and start talking about a few things. First thing I need to let you all know is I'm not a financial advisor. This is not financial advice. Information on this channel is provided for education, informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please read this. That way you know I'm not a financial advisor. Good stuff. What is my... Why is it like that? There we go. Hopefully that fixes it. Anyways, let's get rid of this. All right, so I said trading in 3 easy steps. All right, and also using these 3 easy steps to trade every single day. Go into the market and at least know what to do or what to look for or things like that. I'm going to break a few things down. These are not the steps. All right, I'm just going to break a few things down. And I'm going to use this silly analogy that some of you maybe have heard me use and maybe you haven't. Okay? When you learn anything, all right, you're always going to have or going to have a main task. I'm talking about anything. You learn how to do anything at all. There's always going to be a main task, right? Within that main task, you're going to have, in the trading purpose or what we're talking about here, these are going to be the large templates. Or just template in general, right? These are the templates that we're searching for on a daily basis. This is the playbook. These are the things that I am looking for each day. All right, but whenever you learn something new, we all know that there's going to be a lot of things that go into it. And I could use something like fishing. All right, we could use fishing, right? I'm going to catch fish. And I know this analogy seems ridiculous, but just bear with me. I'm going to go fishing. I'm going to go to this location or whatever, but the main task is to go catch fish. What goes into that? Well, am I going to be on the shore or am I going to be on a boat? Am I going to use artificial bait? Am I going to use live bait? Am I going to use cut bait, dead bait? Am I going to fish the ocean, lake? How am I going to do those things? There's a lot of things that go into fishing. Okay? Now, trading is exactly the same in the sense that whenever I know this is what I'm looking for, I know that this is what it's supposed to look like. Now I need to get down in the nitty-gritty and actually be capable of maybe being good at fishing or good at trading. So now I need to add some things in like 3 pushes, reading price action. Okay, I need to get good at or understand market traps. I need to understand the 3 things that markets do. Okay? And we'll do levels and things like that. All right? So these are all the details. The details and the things that go into the larger template that are going to make me more effective. So whenever I'm looking at something and I can say, okay, well, I'm going to identify my template first, and then I'm going to try and get down in the nitty gritty. Now, I'm going to show you all some templates. We're going to walk through some things, and then we're going to go through and look at how the last couple of days have set up, and then see if we can identify those templates, and then I'll talk a little bit about the details, right? What kind of 3 push patterns do I like to see? What time of day and how and why? All right, and then we'll analyze and we'll take a look and see. All right, so number 1, step 1, identifying a template. All right, and understanding structural breaks. If a market has been going down for an extended period of time, the previous day's high and low and the previous week's high and low is the basis of all trading systems, really. Those are objective levels that are never going to change. Once they're made, they're there. The day closes, those levels are there. So if a market has been going down and it's been making lower lows and lower highs, breaking out of previous day's lows, maybe breaking out of previous week's lows, whatever it may be. So we've been going lower. And then we break a previous day's high. A lot of times this is going to be, or could be, the beginning of a trading opportunity or a trading setup. This is going to typically be for some kind of reversal trade. Now, in my silly little thumbnail, I wrote the first green day. It was like a dump, and then first green day, and then the trend. All right. There's going to be different variations of the same theme. Everything is a different variation of the same theme. In this case here, it looks like this was maybe the first green day right here. We've had multiple days of dump, large dumping days. They actually triggered the previous day's high back over here, which could have been the beginning. They dumped it down, gave us the first green day, triggered the high. It didn't go vertical that day, but it went the next day. The template evolved, but it was a different variation of the same theme. All right, so the step 1 is really looking at the previous day's levels for structure and understanding this. Understanding those structural breaks is going to propel you so much further immediately. Market, and you can do it simply. It doesn't have to be anything complicated. You don't have to do crazy rules or anything like that, okay? Market go down, all right? I think Paulie's in here. He loves this caveman explanation. It's true, though, all right? Market go down. We've been going lower. And then whenever you trigger the other side of that, whenever the market triggers one side, they go back to the other side to retest. Whether or not that retest fails or succeeds, that's what we're looking to see. So we have the up here, right? They tested the high. They tried to go higher. And then what does price action tell us down here? They tried to go lower and they failed. They couldn't. Okay, so we tried to go higher. We couldn't go higher. We tried to go lower. We couldn't go lower. Let's try to go lower one more time. Okay, we can't go lower. What is the only thing, if the market can't go lower, that it can do? It can try to go higher. So it's going to go back and try to go higher. All right, and I know this is like a basic understanding, but I think that even I sometimes, I say it's simple and basic or whatever, and then I start going into 3 pushes and all these other things, and it's like, holy cow, what is this guy going on about? This is the most basic form that you could get it into. They tried to go higher in a down moving market. They couldn't. Okay, let's try to go lower. Okay, we couldn't go lower. We tried again. We couldn't go lower. The only place they can go is back to try and go higher. That's where the setups are coming from. That's how they're built. That's where they're formed. First green day. We've been going down for an extended period of time. We break out. The breakout fails. We have a large dumping day, a day that tried to go lower. George Douglas Taylor, they forced a level and couldn't, giving us a buy day. First green day. They closed above opening price for that day. Now this template evolved, peak formation low, peak formation high, and then I can go and make it as complicated as whatever. But here's another example of that. Okay, again, understanding structure. We had a high of week. This is a Wednesday. We had the high of the week over here on Wednesday. They try in an up moving market too. Okay. Hopefully y'all can see this okay. Do I need to zoom in a little bit? You all tracking along with me? I keep saying tracking all of a sudden, and it's like a new habit that I've randomly picked up, and it's the most ridiculous thing. I'm going to stop immediately. It spawned out of nowhere. Okay, market's been going higher. We have a high of week in place. They tried to go lower. So whenever they try to go lower in an up-moving market, the next thing they're going to do is go back to the high and try to go higher. It can come in different forms. In both of the forms that I've just shown you, they went back to the high and broke out, and then that breakout failed over the course of 2 days. It doesn't have to do that. It could go back to the high and break out and fail in 1 day. This could have been a first red day. Okay, different variations of the same theme. All right, so they try to go lower, they couldn't. They went back to the high and broke out. They failed over the course of 2 days. Now over here, I don't know that the breakout is going to fail until the day closes, but I've got details. I've got structural things that can tell me or help me to understand what I'm looking for the day. Again, previous day's high and low is the basis of everything. Okay, that is the most simple form before I start going into larger details or smaller details, like 3 pushes. Internal structure, basically the structure of the intraday high and low to find the squeezes and time the entries and all that stuff. That's when we start to get a little bit more complicated. But the most simple part of this is we tried to go lower, we couldn't. We went back to the high. Now over here, my idea would be, or have to be, is the market going to break out, succeed, fail, and go back to the other side of the range? So what are some of those details that could have told me over here that this was going to turn into a setup? This was the beginning. This was the continuation or the second day of information. And this detail right here was the nail in the coffin. All right. Again, using the previous day's high and lows to show you or help you. Did it have to trigger previous day's low here for me to take this trade? Absolutely not. There's different variations. But that is a huge, massive detail on this is a daily. I'm basically looking at a daily chart right now. Okay. I'm basically looking at a daily chart. I understand that I'm looking at intraday price action or intraday price movements. But using the previous day's highs and lows, we're essentially looking at a daily chart. They triggered the low of the previous bar, the daily bar. And then they tried to go up, and it couldn't. Intraday. And then it falls back down. So this turns into basically a pump for a dump on the inside, but it also is a part of the larger setup, which was over the course of 3 days. The igloo setup. I just made that up. It's not really called that. But it kind of looks like that, right? It kind of goes up, rounds off, and then follows through back down to the downside. Okay, so I would say step 1, looking at previous day's highs and lows and understanding what they mean. Okay, signal days. On the inside, so step 2, looking at this, understanding there's different variants of the same theme. I know I keep saying the same stuff over and over, but I'm trying to really hammer it home. This day could have looked multiple different ways. It could have turned into a first red day. It could have tried to go higher. It could have broke above previous day's high and failed and went down, closed below previous day, or the close. Excuse me, I'm stuttering all over the place. The open for the day. And then on the next day, we could have had a very similar setup, just presenting a slightly different way. Let's see. We could have had... They trigger previous day's low. We could even had, maybe this was a down moving market. For example, let's talk about a good trend trade opportunity. If this was a down moving market, we triggered previous day's low, and maybe we pop it back up for 2 days. So we'd have 1 day of rise and a higher close, 2 days of rise and a higher close, basically going for level 1, level 2, level 3. And then on the third day, we would have a very similar opportunity. This is usually going to happen in strong breakout markets, maybe on a weekly scale. We're broken out to the downside, and then they pop it back up for a few days. And if you just look at this, everything that I keep on ranting and raving and screaming into the mic about, you can see it all here. It doesn't matter how I describe it. You can see the different phases of the market. You could see level 1, level 2, level 3. However you want to describe it, it doesn't matter. Whatever resonates best with you. Okay, so some people may have learned the 4 phases as accumulation, markup, distribution, and then markdown. Me coming from the originally, BTMM background, you can have your peak formation low, level 1, level 2, level 3, peak formation high, and then you start going back down. Like I said, it doesn't matter what you want to call it. It's going to be what it's going to be, all right? Some other things that you could have had over here on this day. You could have an inside bar. Okay, sometimes it'll present a little bit differently. We get a peak formation low. Maybe this was a larger pumping, sort of day. Maybe back to the high of the week, whatever. And then this next day opens up and is an inside bar. There's another variation. Think about, for most of you that are in here right now, have probably been to my streams 100 times. So you know exactly what I'm talking about. But these different variations that I'm describing right now are right here. All right. They all kind of start similarly, but then they evolve into something like this. And that's what I'm searching for, looking for every single day, every single week. All right. I'm trying to do a little value added to the stream before I actually go into and start looking at this stuff. So hopefully there are some new people in here and it resonates a little bit better with you. And instead of you just, going through this and not really having any clue what I'm talking about, it's helping, hopefully. All right, so we were just looking at very large, big picture things. All right, if you understand how the moves begin, how they can evolve, and then on the day, some of the things that you're looking for, it could have triggered previous day's low here. It could have consolidated and then went back to maybe the high of the day and started to break down and squeeze to go lower. It could have, so in this instance, notice how it pinned through, it broke out and it pulled back. Sometimes it'll just pin and then pop back up a little bit and then roll over. Some variations, it will break out to the downside. Asia makes a lower low. London pulls back. New York is the trade. All right. Something like that, where the previous day's low becomes the top of the box. The low of the day becomes the bottom of the box. And then we get this vertical move. All the stuff that I'm saying right now, I'm really hoping jumps out at you on the chart whenever I start going through the pairs. All right. So step 1, understanding the big picture. Step 2, on the day. Actually, I might be able to get this down into 2 steps, I suppose. On the day, what am I looking for? One of those variations need to take place, but how about my entry? Hopefully the person that was asking about entries the other days is in here right now because they were asking about entries and they wanted more details. I'm about to do some entry details. On the day, I start looking at, number 1, the previous day's levels. Do I have something like that setting up? Because that gives me a lot of details. However, when I'm getting closer to my entry and I'm looking to time it, what am I searching for? So I'm going to give you a shorting example and then I'm going to give you a long example. Number 1, I'm looking for 3. How does a market move and get to a level? So if this has happened, for example, this is a lower low. Whenever structural levels have been broken, whether that be previous day's low or some kind of internal structural level, I always look for 3 pushes afterwards. This is the first mouse. This is, the mouse comes along and it climbs into the trap and it gets trapped, right? It gets smacked. But the second mouse comes along and he just walks on in, grabs a cheese, and goes on about his day, Tom and Jerry style. All right. So I always look for, it's essentially just a pullback. I'm looking to gauge a pullback, and usually those pullbacks come in some 3-push or 3-legged variation. So if I have a lower low put in place, and for a shorting example, I'm going to then wait for it to pull back in a certain way or at a certain time for me to get in. Now, I don't know. 3 pushes is very subjective. I don't know where to get in. I don't know when to get in until I start getting these down closed bars. Up, down, up, and then the run below the neckline. Okay, so you can take a look at this and just kind of see how it's spiking back up and pausing, and then spiking back up into the high. This is a more of a difficult variation to see, but you can see how they're accelerating and pausing, and then accelerating. This is a bit of an A-top, but also this is an up, down, all in one bar. So it's a bit of a micro M. Okay. Now, this is, so on the day itself, 3 pushes. Lower low, step 1. Step 2, 3 pushes. Step 3, peak formation high gets put in place. That's the M or the W for a long example. This next part is very important. Every single time the market breaks out or breaks down, it's going to go sideways. Every single time, don't take my word for it, go and find it. Every single time the market breaks out or breaks down, it's going to go sideways. Every single time the market breaks out or breaks down, it's going to go sideways. Every single time the market breaks out or breaks down, it's going to go sideways. And whenever it starts to follow through, that's where I try to get in. Okay, on the follow through, after the sideways loss of momentum, on the reacceleration, that's where I try to get in, because that is where the market is at its tipping point. It's shown me most confirmation. I have the highest probability of success. And usually you can take, or I can take, the least amount of heat when that occurs. Okay. Every time the market breaks out or breaks down, it's going to go sideways. All right. If you can hear my annoying voice play through your head over and over again, when that happens, hopefully that helps you and benefits. Now, this is a shorting example. On the day, sideways structure, or structure in general, I can look and see. Now, take a look at this, and let's go through a little bit and just observe the template. Market go up. Market is breaking out of previous day's levels 1, 2, and 3. Market tried to go higher. Market couldn't go higher. All right, we got the first red day. All right, they also triggered the previous day's low in the same day, which is good because that's a lower low. Now we can start looking for a setup. We had large pumping days it was over the course of 3 days. Large pumping days, we get a first red day that triggered the previous day's low as well. So that's our lower low. Now we can measure up. Now I'm adding in all this extra stuff, but I'm adding it in slowly for you all, hopefully. You can measure up 3 levels to find a strike zone. Timing of day. On the day, intraday price action. How did things look? I still want to see a lower low on the day over here before I start looking to get in. Now, you can kind of tell, New York session, this is a Friday. What kind of template did we have? On a lower time frame, what would this have looked like? Breakout, pullback, follow through, continuation. So on a lower time frame, I would be looking for the pullback continuation around 9:30. Now, how did this template evolve? This is breakout day 1 to the downside. What do I look for on this day? All of you should be jumping out of your chair and screaming at the computer screen. Project that level across. The market's only going to do 3 things. Look at how this day forms for a trend trade. Okay, they triggered previous day's low. They popped back up 3 levels. We didn't get follow through all the way back down on this day. So I can look for it again over here till it follows through. Okay, it followed through on this day. Now look at this. Look at the timing. It's not set up well for continuation because they broke down and went back into consolidation for the rest of the day. Does that mean I just stopped paying attention to it? No. We still broke the previous day's low in a down moving market, so I can project that level across and look for the trend trade again on the next day. And that cycle is going to repeat, and the market will continue to go down until what happens? We trigger the previous day's high, or maybe we break out of a previous week's level. Imagine this. Market moves in a fractal form, in a fractal nature. Previous week's high and low. Market go down. Market go down. Market trigger previous week's high. What do you think that does? The same exact thing as when it triggers the previous day's high. Market try to go higher, market fail, market try to go back down. It can't. Now we're looking at templates that are a little bit larger, but it's the same theme, different variation. All right. It can help you build the thesis and help you build the larger image of what is happening. Are you all following along with me? Is this making sense? Or have I completely lost everyone? Here we go again. Same exact stuff, same exact idea. I think this is a different pair in a different week or something. All right, how is the template evolving? We're breaking down, project that level across, breakout, pullback, trigger previous day's low, trigger previous day's low, pull back, 3 levels of rise, continuation, trigger previous day's low, 3 levels of rise, continuation, and so forth. One of my biggest struggles used to be markets going down, always look for it to go back up. I'm trying to buy down low and sell up high or whatever, right? But I wasn't looking at it the right way. Because these moves take place over the course of 3 days, this was the key. Lower low, it pops back up and it starts to follow through. There could be a signal day on the in-between. Follow through. Okay, why do I keep trying to buy a downtrend? Why not wait for the larger opportunity? And that was one of my big things with BTMM is I kept on trying to find peak formation low in that larger reversal because I always thought I was in level 3. And then finding Stacey and things like that, it made things make sense. It was always it brought a lot of clarity, okay? All right. So, all of those things in mind, hopefully I brought a decent amount of value. We're 42 or so, 40 minutes into the stream. Let's go and take a look at how the day is looking and how the week is looking on a lot of pairs. Could you give me your insights about closing price on trend trades? Yeah, it's a great level. You can find a lot of squeezes come from that level and things. It's best, if it's a down moving market, it's best to obviously sell above that level because you're going to have less heat. However, do I use closing price? Absolutely. But usually for the larger template. And also for my playbook, I like to take the trend trades, those trap trades, first red day traps where they squeeze to the upside, or the first red day traps where they're squeezing to the downside. I like to take those from closing price. That's really the only time I'll objectively use that level. That's when I really enjoy using it. It helps me confirm that it's a trap. That's my take on it. All right, so taking a look at this week. I didn't want to spend an insane amount of time sitting here and going through and looking at templates with you all. I wanted to do the stream and connect with you all and say hi and see how you all are doing and hopefully provide as much value to you. But I'm not going to sit here and go crazy on these templates when in reality I'm going to tell you at the end of the stream it's FOMC at 2 p.m. and I don't trade New York session in the morning when FOMC is on the calendar. Okay, the template could look unbelievably perfect. And this is why I don't trade FOMC days in the morning. It could look extremely perfect. It looks like it's going to follow through, and then it doesn't because it's waiting for that news. And coming to the market today and seeing how coiled everything is, it really just kind of confirmed that to me. So I was like, I'm even less willing to trade. All right, so NASDAQ peak formation high of week. Notice Thursday of last week. Okay, we're in a down moving market. We triggered the low. We broke out. We triggered the high. All right, we got the follow through. Actually triggered the high back over here. This was my initial area that I was looking at. Okay. Down moving market. We triggered the high. We dump it back down. Try to go higher. Couldn't go lower. Where we're going. Let's go back to the high. Try that. All right. That failed as well. Now we're maybe broken back down, but in reality, this is just peak formation high, peak formation low, and a bit of a range. All right. Everything this, I know it looks like kind of like those examples that we just looked at back over here. It looks really similar, doesn't it? And I'm not trying to do that stupid, annoying gotcha thing at all. I'm just really trying to point it out when I can. No. Okay, this one. Market go down, market trigger high. Can't go lower. We go back to high. It's the same concept. We go down. We try to go higher. We try to go lower. Can't do that. We go back to the high. We've gone back to the high now. High of week has failed. We're broken out to the downside. So now thinking about the weekly templates, I've got a peak formation high, peak formation low, and a consolidation in the middle. I've got my breakout level projected across, and I've got the close on the screen because I'm looking for that squeeze. However, with FOMC, I won't be doing any of those things. I want to make that very clear. Okay, US 30. Very similar, except it presented it a little different. All right, we had 3 days of shorts in the market. Breakout, breakout, breakout. Down moving market. Front side of the move was broke on Friday, and that was the first green day. They triggered the previous day's high, pulled back, and we got the breakout day one on Monday. Now, this is presented throughout the week a little bit different. It's more of a 3-day rectangle than the NASDAQ is. It's a little bit more clean. In my opinion, it's a little bit more nice. I've put first red day up here, but I've also projected my breakout level across to highlight we've got a peak formation high, peak formation low, and a rectangle. And we've got a smaller rectangle on the inside. Is it going to fail? Which it could, right? We could still see maybe previous day's low get triggered, and then that follow through back down to where the pump begins, because we're in a down moving market on a weekly scale. All right, we're breaking out to the downside on a weekly scale. All right, so I have to put that in there. I want to be aware of that. Okay, US 30 looks clean. I really like this. If it wasn't FOMC, I would be watching. Okay, now I've also got, there's a bird just flying right in front of my face, in front of my window. Anyway, sorry, that freaked me out. We had a dump begin from the high. This is the high of the week. They've dumped it back down. This is part of the rectangle, okay? So if this were to fail, peak formation low, consolidation, if we're going back to the high. That's the only reason I've included this. Looks pretty good, though. All right, S&P is kind of a morph, if you will, between US 30 and the NASDAQ. Because we closed in breakout on Monday, which I want to highlight this again. This is the same exact template as all the other indexes. They were going down, market go down. We went and we triggered the previous day's high over here on Wednesday. We dumped it back down into the low, peak formation low that fails the next day. First green day, breakout day one to the upside. We get the follow through on Monday. And we had the failed breakout now, as of Tuesday, peak formation high, peak formation low, which was also an inside bar. And it's like a morph between. So now instead of the rectangle sitting on top, we've got the rectangle sitting underneath, which could be interesting. Okay, Russell, very similar to US 30. Okay, spike the high, try to go back to the low. Okay, we've gone back to the high. We didn't quite get there, actually. But it was a breakout day. Project that level across. Now we've got the peak formation high, peak formation low, inside bar, inside day rectangle with a smaller consolidation on the inside. Same thing as US 30. Okay. Oil. Oil kind of went to the top of my list. If it wasn't FOMC, I really liked what I'm seeing. Okay, oil, again, we've been in a down moving market. We've got breakouts to the downside weekly. Inside bar. Okay, we've gone back to the high. We triggered previous week's high. Now, this can tell us two things. Either one, we're going down. Maybe we get a first green day to go back up. Or understanding inside bars and having done a lot of case studies on them, we've triggered the high of an inside bar. There's now breakout traders triggered into the market. The only other place that the market could go to go back for the money would be the other side of the range, okay? Now, that's on a larger scale. Let's look at this week and see how things have developed. All right, we had Monday opening range for the week, breakout day 1. Tried to go higher for breakout day 2, and that failed. Peak formation high. Breakout to the downside, project that level across for the first day, breakout day 1. My question to myself is, are we going to break out, pull back trend, breakout reverse, or stay inside of a trading range? We now have a failed breakout at the high of the week and a confirmed breakout to the low of the week. We've triggered previous day's low on the day and pumped it back up. Is this going to make higher highs and higher lows and then make a lower low and break down? Are we going back to the low? Is it a trend trade? Questions for myself, okay? Does that have to happen? Absolutely not. Absolutely not. It could come up here, consolidate. Maybe this is we've broken back up to the upside of the previous day's low. They consolidate, and then we get the squeeze. We just made a higher high on the day. Maybe we're going to squeeze to go higher. Maybe we're going to wait until FOMC. Who knows? I'm just pointing out some situations that could take place. Is the, hold on, let me double check. Is inventories today 10:30? Or is FOMC affecting that? I didn't double check that this morning before we started this thing. I probably should have done that. Let's see, energy. It is today. All right, 10:30. We got the oil inventories. Good. Hopefully everyone's tracking along with what I just said. I just said it again. Holy cow, I'm losing my mind. Is everybody following along with the thought process? Is this making, for all, I've got about 50 of you in here right now, which is great. Was the explanation at the beginning of the stream effective for helping you understand all these things that I'm looking at now? Was that an effective way of communication? Recap is good. Sure is. See it once, see it twice, see it again, see it a fourth time, see it 100 more times. Really burn it in. Good deal. All right, natural gas. Yeah, I had to update my trading view today, and then now it started putting this. Maybe I just don't know what the heck. I don't know. It's never put this pink box here before, but I don't know how to get rid of it. It just showed up this morning. So if one of you know, please tell me, because it's going to drive me insane. I don't even want to look at this thing. All right. We've been going down. Is this what I need to do? Hold on. There should be like a... Oh, there we go. It did a bait and switch on me. That's what happened. Oh, wait. Now we're really screwed up. If it ain't broke, TradingView, don't fix it. Why did you all do this? Whatever. You changed your hours. I did not change anything. All right. I put it back, but now I'm getting these. Anyways. Let's go. I'm not even going to look at this thing. Yeah, I'm going to go back. I'm not going to cheat you all out of it. All right, we've been going lower. They triggered the previous day's high on Monday. They tried to go back down on Tuesday. It failed. All right, first green day. That first green day has already gone vertical. 4K, you have a good one. Template may be evolving. I don't know. Maybe we're going back up. to where that move began. No idea. That's a good thought process, though. All right, gold. Okay, gold, we've got 3 days of breakouts, so looking at signal days, but we're also in a very strongly up-moving market. Now, I did highlight this earlier this week or maybe last week. I can't remember. Triggered previous week's low. We've gone back to the high and broke out. And that breakout seems to be succeeding right now. Breakout day 1, 2, and 3. Going higher. We've gone higher, right? We've gone lower for the day on a 5-minute. I understand that's not really a huge amount of weight. Normally, I like to get in on compression. So I like to see things up here consolidating. They break down, they pull back, and then that's the move down. We've already kind of got this weird lower low. However, I will say that the pop-up is nice. This is pretty clean. Like if I was going to trade this today, that's kind of what I would be looking at, waiting for. Me personally, I would be waiting for them to probably start making lower lows and lower highs over here as well. So breaking out and letting these people over here who are still short maybe, let them into profit before I feel comfortable taking that trade. This is where the pump would have began. And that's how I would personally be looking to trade that low of the day. Going from high of day back to low of day, if it were to present and present well. Obviously, I can't predict the future, so I don't know if that's going to happen. Okay, silver. Okay, now silver's interesting because market go up. Okay, beginning of the week, peak formation high, peak formation low. We attempted to trade through the low, so we triggered previous day's low in an up-moving market. We've gone back to the high, which has now maybe failed. So I'm going to project that level across. All right. The breakout level, always projecting that thing across. Why am I not able to? There we go. And the thing that's most interesting to me is that we've gone and triggered previous day's low and then popped back up. Peak 1, peak 2, peak 3. Engulfment down. The only problem with this is probably the timing. What time is this? I guess it was right at the beginning of the session, so maybe a first hour trade. We've broken down. We've gone sideways. Again, I don't know what this is going to do, but that would be my thought process. Lower low, 3 legs to the high. Market's only going to do 3 things. It might actually be a part of a larger setup. Maybe. We don't know. And let's take a look at this pattern. Just squint at it a little bit, all right? Let's just squint at it just a little bit. All right, we'll go back to a 15 chart. All right, squint at it, and then tell me what you think. Okay. Squint at it and just tell me what you think. This is the reason that I'm capable of building or thinking about certain things or a thesis or whatever, is because I have so many examples and seen it so many times. Now, do I know that this is going to follow through the way that it did over here? Absolutely not. I just wait for evidence. But I do know that I've seen this before. Market go up, market put in a high, market try to go lower, go back to the high and fail. Okay, very similar situation. All right. Bitcoin. They did it to me on this one too. I just can't do it. It hurts. It hurts to see these pink boxes up here. I can't even see. All right, ladies and gentlemen, I really hope this stream has been beneficial to you and helpful. I really tried to put a lot of effort into the fact that as far as templates go, I'm not going to spend an insane amount of time analyzing or going through the cycle and all this stuff, considering I'm not going to be trading today. It would be, I would say, pointless to do so, and I would just be doing it to do it. So instead of doing that, I try to bring as much value as I possibly could by starting out the stream for about 30 minutes with a good review, if you will. All right, ladies and gentlemen, I hope this has been beneficial and useful to you. Do these streams for anybody who might be new in here and is just watching in the background. I do these streams every Wednesday and Friday, starting at 8 a.m. I had a webinar this week, so I'm having to start a little bit later. And I do a video every Monday. You have a great rest of your day, great rest of your week, and I'll see you on Friday. Bye-bye.